Fidelity Japan Trust was launched in 1994. It has a market cap of around £200 million and it invests across the spectrum of Japanese companies with a bias to small and mid-cap growth stocks. Fidelity has been in Japan since the 1960s, was actually its first office outside the US, and they have 13 research analysts who provide deep on-the-ground coverage in a market where the huge majority of stocks lack any sell-side coverage at all. The portfolio manager, Nicholas Price, has been with Fidelity in Japan since 1993, where he started as an analyst, and he's managed Fidelity Japan Trust since the 1st of September 2015. The trust follows a growth at a reasonable price strategy, and it holds around 80 to 110 companies where current valuations do not reflect what the managers see as the medium-term growth potential. Well, until May this year, it was called Fidelity Japanese Values, which had been its name since launch. It's also changed its benchmark from a small and mid-cap Japanese index to the main topics index, and it's moved from the Association of Investment Companies, Japanese smaller companies sector to the Japan sector. So all of these changes, while they might sound significant, what they really do is they just bring things into line with how the manager was running the trust, rather than signifying any fundamental changes. There's also a new management fee structure, which should bring the ongoing charges for the fund more into line with peers. While current themes in the portfolio are largely related to demographics, Japan is well known for having an aging population, and one of the things that means is a shrinking workforce. So stocks that are involved in staffing, in recruitment, particularly from overseas to fill gaps in industries where there are deficits. Factory automation, because it's harder to find factory workers, so automating factories means fewer staff are required. Then other things related to an aging population, such as funeral services. On the other hand, there are no banks at all in the portfolio because the manager sees the sector as being unattractive. And there's also very little exposure to Japanese car makers, although they may be household names. The fundamentals aren't good because of the capital expenditure requirements to tackle the need for electric vehicles. Well, it's recently changed its benchmark from the small and mid-cap index to the broad topics index, but it's outperformed both the old benchmark and the new benchmark over the last 1, 3, 5, and 10 years to the end of August, in both share price and net asset value terms. It's also produced strong absolute returns in the 3 years that it's been managed by Nicholas Price, returning more than 20% a year. The NAV performance has still been good over shorter periods, but the share price has lagged in the last few months amid weaker demand for Japanese investments, and that's caused the discount to widen. It's currently around 13%, which is wider than it has been over the past year on average. The trust uses gearing through long contracts for differences, or CFDs, which increase individual stock conviction rather than being applied across the whole portfolio. The gearing is currently around 14%, which is a bit lower than it's been on average in the last 12 months at around 17%. The rest of the year might be tricky economically for Japan in the face of Donald Trump's trade war with Asia and also some natural disasters. But the manager of Fidelity Japan Trust still sees good long-term growth opportunities among companies with strong domestic brands and competitive positions that are starting to expand within Asia and globally.